Okay, that's nice.
Thank you. What is wrong with this? Can you see my screen?
I'm not yet seeing it. What of the other guy?
He's sick, so he won't be able to join us.
Oh, my regards to him.
Okay. Okay, now let's talk more about execution. Now remember our model is liquidity grab. Remember?
Yes.
We sell lows, sorry, we buy lows and we sell high. But we don't just buy any kind of high, we don't just buy any kind of low. Now, assuming we have a kind of push like this, and we had something like this, I've encouraged you guys never to sell something like this, because to me there is not enough liquidity that has been built. So I love to see liquidity being built with a movement like this, then when this liquidity is built, I trust this more than just a straight and start dropping. I don't trust this at all. I trust this one more than this move here and start selling. Are you getting it? Which is why most of the time I wait. You get? I wait to see this particular action before I sell. You getting it? So if this is the only thing you are waiting for, it will help you a lot in your trading. All you just want to see is to want to see a drop. Once you've seen this drop, you've identified this peak, whatever you want to call it, then just wait for a kind of retracement. That will generate enough liquidity. Once liquidity has not been generated, you shouldn't engage in that trade. I don't like this particular style. I don't like it at all. I like to see the market going up, down, selling, buying, selling, then at a specific time, grab all the liquidity that has been engineered and started selling. This is how I prefer to see it. However, there are times you won't see something like this. What you see is a straight drop, then a retracement. Now, even if I'm going to sell a kind of sharp edge retracement, I prefer to see it retracing deep, a very deep retracement. Then I can sell from there. But if the retracement is not deep, I prefer to see liquidity being engineered. Do you get me?
Yes.
So that's for the sell. And for the buy, if you've identified the peak, I hate this. I don't like it. Rather, what I love to see is to see liquidity being engineered. Are you getting it? Liquidity being engineered. Then I buy. Then most preferably from the discount of this price leg, from this low to this high, it's discount. That is where I like to see my setup formed. Then my stop loss will be at this low or somewhere around this area. Exactly.
Yes.
So if even if I must buy a sharp retracement like this, I prefer to see down to a discount, then I'll buy. Because if it moves into a discount, it's moving into a pool of liquidity, an area where liquidity was engineered. So it's moving down towards this area where liquidity has been engineered. It's a good area to buy, even if it's just a kind of simple retracement. You get? So you just buy it. Now you have a stop. So sometimes they will come below here, grab this liquidity, but I prefer to see them retracing somewhere around this other block here, and they move about their way. Now let me show you some example from the chart. Now, where would I use? Let me go to the 15 minutes so that you get something. Now this is the 15 minutes. If you notice this movement, I want to use a very clear example. Now, can you remember that okay? I actually took this trade, but it took me out. I couldn't send the screenshots. No, 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 it was not this one. I was expecting, this was what I was expecting. I was expecting this market to go up a little bit, then drop, but it did not. I was looking at GU that very day. So I I sold GU. I sold GU here. I sold GU at this point on this candle, this particular candle that went up. This was where I sold GU. So I was expecting GU to drop while EU should give us another push up. While EU should give us another push up here. I was expecting this push to go up and grab the liquidity here before EU starts dropping. But unfortunately, EU did not do that. It was GU that did the push up. Are you with me? Are you with me?
Yes.
So it was GU that did this push up. I was not expecting this push up on GU. I thought EU would be the one that would do that push up, but unfortunately, GU did that push up. So in general, this is what I like to see when the market is retracing. You get, I don't like to sell this kind of retracement. Like the market retrace like this, I don't like selling it. I prefer to see the market engineer liquidity. Can you see engineered liquidity, engineered liquidity, engineered liquidity? There's somewhere around the premium of this range from this high to this low, somewhere around there. You can even buy from here, sorry, sell from here, place your stop loss here. It just depends on the kind of risk you are willing to take. And mind you, if you are picking a trade, don't because of it has retested your entry, then you want to go for a better entry. No, don't do that. Assuming you know that the market is going to sell, right? Then you sold here. You sold at this high. Immediately the market went above this high. You sold. And it retested your entry. Now you're thinking to yourself, oh, the market has given me a better entry. Let me open another trade. Then it went your way. All of a sudden it came back. Oh, the market has given me a better entry. Let me pick it. No, don't ever do that. Okay? What I would advise you to do is, if you've picked an entry, assuming this was the entry you picked, this first retest to this high, you picked it, and your stop loss is here, never move your stop loss no matter what until it has reached your TP or close to your TP. Now, it doesn't mean that if you TP early, now if how do I like to do my TP? Okay, before that, I will explain how I TP mostly, but let me explain this entry. Now, let me talk about the stop loss. Sorry, this is the range, this high and this low, or you might be looking at this high and this low. Now, between this high and this low, once price moves to premium, you want to start looking for your entry setup at a specific time. Now, the market has retraced. Remember, I don't like a kind of sharp edge retracement except if liquidity has been generated. Now, the liquidity was generated here. You see market moving up and down, up and down, up and down. Did this and came back here, grabbed the liquidity that was engineered at this time and started selling. So this is the type of price action I love to see. Now, to the first thing is for you to what's it called, identify the bias. The market sold here, so there's possibility that the next day is also going to sell. But if the next day is retracing into that price leg of yesterday, you want to see liquidity being engineered. Now look at this, market sold from this point to this point. Now when the market was retracing, you don't just sell movement, that you want to see liquidity being engineered, and being taken out. Now they engineered this high, they took it out here, create another high, they took it out here, created another new high, they took it out here before they started moving down. Are you seeing it? Now this is what we call liquidity being generated. They are generating liquidity and taking it out, and what they call tricking people to enter the trade. Now as long as the trade has not reached a premium level, I'm not going to sell, and liquidity has been engineered, and we have this same thing. Now this movement started even before the opening of London session, but that is not an issue. Now this has already happened. We've seen this leg. Remember, if you want to sell, you sell what's it called, I sold this market. I don't know if I sent the screenshot, but I sold this market. You wait for the same thing. This is the price leg. You wait for the same thing. The retracement should engineer liquidity on a lower time frame. And let's go to that lower time frame and view it. Now this is it on the lower time frame. You can see the liquidity it has engineered, grabbed this high and started selling. Can you see? And this one happened during London session. It happened into London session, even down into New York. Can you see it? Answer me, are you with me?
Yes, I'm with you. I normally leave my mic.
Okay, so that's it. You just look for the same pattern over and over again, wait for this kind of movement. And mind you, when the retracement is going, after this kind of movement, when the retracement has started, you may not get a setup that same day, but there's possibility that once you identify this, a setup will come the next day. And see, setup came the next day. Now if you miss this one, you have to set up the next day. So you see it. In general, all you just need to do is to identify the trend. Now look at this. Let's go to the weekly. Let's go to the weekly. Now look at this. This market did this. There are some times the market will just retrace. It won't generate liquidity and it will just continue going. Yeah, these are times that you can't do anything about. you just have to miss the setup, you get. But when they gave you a very deep retracement, you can see a deep retracement into another block, this is where you want to capitalize on. A deep retracement, you can see there was not much liquidity being generated, that up and down moving, up and down, it was just up, down. Are you seeing it? But this downward movement generate a very high big liquidity, which was this one, something like this. It was something like this, you get. So if I'm going to use another this thing, something like this, are you seeing it?
Yes.
So if I'm going to buy a straight retracement, I prefer to see it moving down into this area. That's how I prefer to see it, moving deep down into inside that area. Now, using this, let's explain the trade I took today on EU. Now, I've identified this movement from this side to this point. I identified it. Now, what happened the previous day? The previous day we have this movement. This movement is low being grabbed, right? And this movement. Now, initially when I saw this yesterday, I was expecting the market to retrace down into this FVG here. This was what I was expecting the market to do, to retrace deep into this FVG. That was my expectation. Are you getting it? But when I woke up today, I noticed that the Asian have done this. The Asian session have done this movement. And when it was retracing into London, the market was not going below this low, it was just generating liquidity around here. So that was how I knew that, okay, this will be next. If you look at the screenshot I dropped, I placed my arrow here. I did this, targeting this high, this particular high. That was my target, this particular high, yesterday's high. That was my target. So after I've seen this thing, there was not much liquidity being generated, but what? The market traded into discount, deep into discount of this leg. Look at the FVG. If you ever look up, market traded into it, then I bought. Now, if you buy from here to this point, you've got at least 3 of this, how many pips? 20 pips. Have movement from that point to that point. So 20 pips. And because of my spread, the market opened somewhere around here. Because of the spread of my trade, it opened somewhere around here. So, are you getting it?
Yes, but I don't understand this box place that
This one.
this look. Yes.
I told you this was where I was actually expecting the retracement to come into.
Okay.
When I saw this yesterday, before all this price action was printed today, my thought will get something like this. This was my thought yesterday before today market opened. We get something like this. You're getting it? So that was my thought. But after the Asian session, I noticed this movement from this low to this high, grabbing the liquidity, this liquidity. this sell side liquidity, market grabbed it and moved, right? When I noticed it, I was still waiting for the market to come down here during London. Are you getting it? But I noticed during London, the market was refusing to go beyond this. It was refusing to go beyond this low because each time it comes close, it rejects. Each time it comes close, it rejects. That was how I knew that the market was not going to break this low yet. So they grabbed this liquidity and they started moving. Can you see it? My target was actually this high. I was targeting this high. But unfortunately, the market did not get to that point. Market did not get to that point. So this box was just a kind of speculation that the market would get here, but it never did. Are you getting it?
Yes.
Now let's look for more example. This is another example where the market dropped, move into what? Discount. But the discount is not that deep. So I may not like to sell this one here because the discount was not that deep. The retracement into the discount was not that deep. Maybe I did been this particular retracement got to somewhere around here, and I would have loved to sell it, but it did not. Then it did this, forming this high to this low. Now this gave us a better retracement to this high. Better retracement, a very deep retracement. Now I prefer to sell this because of two reasons. One, it's a deep retracement to this point. Number two, it has grabbed liquidity that was engineered by this short-term retracement, right? It has grabbed that liquidity. So because of that, I prefer to sell this. Are you seeing it? Hello. Please.
I can see it. I can see it.
Yeah, please unmute yourself.
Okay.
As long as there's no noise at your end, you don't need to worry about it. Just unmute yourself, okay?
No issue.
Now look at this movement from this low to this high. Now when the retracement was very deep down to this other block, see they started buying again. There was no much liquidity being engineered. Are you getting it? So this is why I tell you, if I must sell a retracement, retracement should be something like this. If I must sell a sharp retracement that did not engineer liquidity, it must move very deep into a discount, preferably another block. Then I'll start buying. Now, but I prefer to see something like this. This kind of liquidity being engineered into discounts, then I buy. This is what I prefer to see. Are you getting me?
Yes.
Now this I'm teaching you is what a kind of it's a kind of sorry, execution. I'm teaching execution right now. Now if you notice this move, this move dropped, right? The market started engineering liquidity, move up, move up. This is a daily chart, that's why you're not seeing it very clearly, but it is the same thing I've been explaining. If you go to the 4 hour, you see it clearly. Let me mark that FVG. Now let's go to the 4 hour. See what I'm telling you? Retrace, did this, retrace, then finally grab this liquidity. Grab this liquidity, then started selling. And this is what I prefer to see the most. Because once it's done, the market moves very swiftly. Same thing here. Market did this drop, right? Then retrace down, down like this, then came back and grabbed the whole liquidity that was built, clearing everything, and started selling again. So these are the type of retracement I love to see. Same thing here. Clear all the liquidity here. And started dropping. Can you see it? So this is how I prefer to see my entry. This is just how I prefer to see it. Now look at this. This drop right here, right? A shallow retracement, no much liquidity being engineered. Then it dropped. Then the next day or the next week, look at how deep it retraced, preferably to another block. I told you, once it's doing a deep retracement, I prefer preferably for it to retrace to another block instead of an FVG. Are you seeing it?
Which time frame do you basically look at when you want to see all these things?
It depends on the time frame. Okay, for instance, now this is everything that's between this vertical line and this vertical line, right? It's a price action that occurs in a week from Monday till Friday, because this is a 4 hour time frame, right? So now all I just need to do is to see this is a new week, right? This week opened somewhere around here. Now, since the week opened somewhere around here, where do I prefer to involve myself in this market? Where do I prefer to involve myself inside this market the most? So all I just need to do is to do my analysis. Okay, if I'm going to be a seller, right, I prefer to sell when liquidity has been engineered very well. But at this point, I'm not seeing a lot of liquidity being engineered, so I will wait for a liquidity to be engineered, then I will use an FVG. But if liquidity has not been engineered and I started seeing this kind of movement, then I'll prefer to start selling at an order block. You get? Are you with me?
Yeah.
Assuming I've already established my bias to be bearish and I see this movement, like I told you, I don't like a single retracement like this. It's too shallow for my liking, and the liquidity is too shallow also. The liquidity is not much. I like to see enough liquidity being built. Market go down, up, down, up, down, up, then a retracement into this FVG, then I will sell. But since we did not get anything like that and we had this, I prefer to see a deep retracement into another block. Now this was the other block they used and they started selling. Are you seeing it?
Yeah.
Now look at this, the same thing. Shallow retracement, did this, then they came back into this FVG. Now look at this, into this FVG, which is also an order block. 1, 2, so another block. This one is also another block. You get There are different type of ICT order block that you've not actually learned. You're going to learn them sometime. So if you have enough patience, maybe you don't like this other block, you want to see this particular other block, all you just need to do is to have patience for a very long time, because this is 4 hour time frame. This is a 4 hour time frame. Now if you place your horizontal line on this other block, and let's see what happened. You can see the market actually came to that point at this place, retested the other block and sold to this point. But that's not in the ideal, that's not the what's it called, my focus in this topic. That's not my focus. My focus is for you to know how to execute using retracement. You don't need to actually bother yourself much if you don't know the direction. All you just need to do is to wait. Is to wait. Now, just observe this. We had this high like this, right? And the market never gave us a kind of any deep retracement or shallow retracement. It will only give us a shallow retracement, start selling, shallow retracement, start selling. So there are two things here. If I want to engage in this particular trade, I won't look at it from this time frame. Rather, I'll go to daily time frame. Now, this is the daily time frame, right? Right?
Yes.
Now, where is the first retracement since this movement? This was the first retracement, which is this one, and it's a very shallow retracement, and they did this. So what I want to see is liquidity being engineered around here, then
Yes.
maybe this FVG here or this one, the market start dropping. But if the market did not do that, I like to see the market coming to this other block. Or we can use this particular other block. What in one of them, either this or this, depending on where the market decide to come to. But I prefer this one. Are you getting it? So this is how I do my analysis.
Yes.
This is how I do my analysis. So honestly, I prefer if the market is going to, because now if you look at this, we had this shallow retracement. The market did this, and gave us a very deep retracement to this other block and went to this high. Now the market is coming from that high into another other block. Now what do we have here? We also had a kind of shallow retracement here. Kind of shallow retracement. There is possibility that the market will come for this low. There's possibility that it's going to come for this low, right?
Yes.
Before it starts moving up. But honestly, I want to see this first. I want to see this retracement happening first before this retracement, before coming down here then up. I want to see this retracement happening first. I want to see it functioning first, then maybe towards this FVG. Into that other block. If the FV, depending on what profile they printed, if it's a kind of ranging profile like engineering liquidity, depending on the profile they print, this is what I will be expecting from the market, because this is what I like to see, liquidity being engineered at a point of retracement. Go to the weekly, you will see it, and the market is retracing deeply into another block. Can you see it? Deeply into another block. So the time all just the same thing happen all over and over and over again. All you just need to do is to what, look at it from a high time frame perspective if you're not getting it from the lower time frame. You understand, right?
Yes, yes.
Mm. This is a new year, right? The previous year grabbed this liquidity and started move selling. And remember what I told you. This was the move, a very shallow retracement. Market went up, generated this liquidity, went up again, came back, grabbing this liquidity. Are you seeing it? Grabbing that liquidity, and it started moving. A shallow retracement, went up, generated liquidity. Now, once the liquidity has been generated very well, market started going up again. Liquidity has been generated enough, market started going up again. So what I think is, if this low is being disrespected, it means the market will definitely come down to discount here, or even maybe this low. But for now, what I prefer to see is a retracement around somewhere around here. Now this week has closed, and the week closed below this candle. It closed below last week candle's low, so I expect next week to do a little retracement downward before going upward, whatever. But I'm expecting price to come to this point first before this, or if it gets to this point first, I don't expect this area to move price down. I expect the area to be disrespected. So that's it for tonight. I just talk about execution, and the execution I talked about is a kind of retracement entry. Don't worry yourself about peak. You get, when the market is doing all this, you just need to give it time to do whatever it wants to do. And I've told you, there are times when the market consolidates. Asian session, first week of the month, first day of the week, which is Monday. Well, again, first quarter of the year, which is January, February, March. So these are a period where the market consolidates, and these are period where the peak are mostly formed. The peak are mostly formed in this area. So maybe when the next quarter session or day comes, it manipulates all this consolidation, grab the liquidity that was formed there, and it will start moving. So that's what mainly happened during the second quarter, second day, second week, and second session. Is that clear?
Yes, yes.
So do you have any question?
You just work on this one like stuff.
Yeah, so just go and observe, and I will employ you to use TradingView to do this back testing. Use the what's it called, the rewind, but rewind tool. Are you getting it? Rewind to use it, and there's where you can use it. That's my TradingView. If you don't have a premium subscription, you can do it on the daily, the weekly, and the monthly, on above. Assuming this is your chart. What is happening? Assuming this is your chart, you want to back test somewhere around, go to 1 month. You want to back test this. All you just need to do is to bar replay, this. Look at what price is doing. Remember, this is the type of price action I told you I love seeing. I love seeing we have this movement down, right? Liquidity being in Guinea, liquidity being in Guinea, and all those liquidity cleared. They were cleared here. They were cleared here. So all I just need to do is to wait and see. This also is a shallow retracement. Shallow retracement. I don't like it, so I will not participate in it. Just wait to see what. I just wait to see what the market will do. You see why you need to wait. Now I've paused it. It has broken this leg with a shallow retracement. So what you need to do now is to wait. Now you have to wait for something, either the market to trade into this FVG or the other block, depending on what you are comfortable with. And if you are picking this type of entry, you're only picking it for a short term. You are not looking to swing it to a kind of low here. No, you're waiting to pick it for just a short term. Why? Because this was a shallow retracement. This was a shallow retracement, so there's possibility that price is coming back there. So you play. And there's one thing in the course of my trading, there's one thing I know. So let me just forget about that for now. Now the markets have retested can you see? I wanted to say it, but it went very fast. It has retested this FVG. You see? And you go for just a short term, targeting this slow preferably. Once you've done that, you're okay. Are you getting it? Once you've pick a trade like this, just target this low. You don't need to go for this one. You don't need to go for this low. But if you are lucky, sometimes you may get it. Like in this case, you are lucky, you gotten it, right? So, but don't always go for this kind of. Once you've seen a shallow retracement, and the shallow retracement created a new range, like this high to this low, and it left an FVG. Start looking to pick your entry from that FVG and target the new low that was formed. Because you don't never know, this shallow retracement, they might come back to it and grab it before moving. So that's what I'm talking about. And another thing you need to notice again here is from this point here, this other block here, to this point, it's a kind of deep retracement between this and this, right? So anyway, let's forget about that. Whenever you see a shallow retracement create an FVG, target that FVG and target the new low or high that was created. Don't target much. So me, anything below this low, that is not my concern. I won't chase it. Let's see what the market will do. Now, when you start seeing candles like this, you've seen one, you've seen two, you've seen three, be expecting that the market will it's about to reverse or retrace. Once you start seeing low profile candle, low volume candles. Are you in my Telegram channel?
Yeah.
I Have you watched my videos on low volume candles?
And doing that consolidation
Yeah,
time, triangle consolidation and diagonal.
exactly. Once you start seeing low volume candle, it's a sign. It's not always a sign, but most of the time, it's a sign the market is about to reverse or retrace. It's a sign, not just that it will retrace on that particular candle. Please, I'm repeating myself. It's a sign that the market is about to retrace or reverse. Can you see? This particular candle also closed with a low volume candle, low volume candle, low volume candle. Now what do we have here? We have an FVG, but I will never be okay with this kind of FVG. I'll never. Can you see? The market never retraced into that FVG. It never did. So the market just kept on going higher, lower, lower, lower. So at this point, you may want to go to even a very higher time frame to see what is happening. 3 months. So you can see the market is doing a deep retracement after doing all this after engineering this liquidity, retracing into another block. Retracing into another block. So there's possibility the market will push higher from here. And let's watch and see. Let's go back to the monthly. Can you see the market is already pushing higher? At this point, you just have to wait. And you see, market is already pushing higher. Now that the market has closed above this candle, this candle automatically becomes another block. Don't worry, we'll get there. We'll get to that point. But for now, let's keep watching. So for me here, there's nothing for me to do here. Even if I'm going to do anything, I have this movement, right? I have this movement. If I'm watching maybe on a lower time frame and the market is retracing deep into this other block, I might consider it and placing my stop on this candle or this candle. But honestly, I don't like this. Like I said, if I'm going to sell, this is a shallow retracement for me. I never partake in a shallow retracement trade. This is a shallow retracement to the sell side, meaning I can't sell this even if I want to sell. It's too shallow for me. I prefer to see it coming back to this other block than a short term sell and so. But that is too shallow for me. You see how I'm interchanging between time frames, right?
Yes.
So sometimes you get to a point you just want to see what is happening on a higher time frame. Like I told you the other time, I don't want to have anything to do with this FVG. I don't want to have anything to do with the FVG at all. So that's not my type of FVG. The type of FVG I prefer to see is the one that generates engineer liquidity below it. Enough liquidity below it. Now, just imagine you sold from inside that FVG. See the way it's retesting it, retesting it, retesting it, and now it has broken it. Now, even if I want to consider selling at this range, this is where I will consider selling it at this other block, because there's possibility that the market will move down, because shallow retracement give birth to what? A deep retracement, and when we are expecting a deep retracement, we want to see it go to the what? Other block. So even if I'm going to consider selling, I will consider selling at this point. Now let's watch. But like I told you, we had a shallow retracement here, right? So this might be protected, this high might be protected, but this one, let's see, let's watch and see. Now there are two things, there are two places I would have loved to pick an entry: this other block one and the high two. So if this one failed, I will look at this high. If this one failed as well, then I will start looking for buy opportunity. Are you seeing the other block giving a short-term opportunity?
Yeah.
Can you see this other block now? It's giving us a short-term sell. At least this is more than 100 pip. This is a monthly time frame. It's more than 100 pip. So if you sold to this point, you've gotten something, right? Now, selling to this point now, it's also a discount of this, or this leg to this high. It's also a discount. So you want to be careful holding trades around here. Are you getting it? It's also a discount because there are a lot of other blocks here. See, sell other block, sell other block, other block, other block. So you want to be careful at this area. Now, like I told you, once you start seeing low volume candle, you should start expecting a retracement or reversal. Don't try to guess which of the candle will reverse. It's just, you just try to anticipate it, anticipating it. Okay. So now we have this. If the market is going to be bullish, we have this low here. We have this low here. So the way once they come to this low, the manner in which they got to that point is what will determine if I will go bullish or not. I don't have any trade here for now. Like you see, still low volume candle. So now I prefer, the only thing that will make me buy this is if they come down to this low with a very high volume candle. That's the only thing that will make me buy this low. Now you see, they've gotten to that low. Now look how they are acting around there. Can you see? They are buying. Are you seeing it? So this movement to that high, it's enough to give you something. It's enough. It's enough. So you don't need much. This is why you just need to take little by little and you're out. Now you're still having a shallow retracement here. So don't do anything in shallow retracement. Just hold on and see what the market will offer you. Now you see, they've gotten to this point, taking it out. We will still go bullish from here. Now this is what I was telling you. The way they come, all these are low volume candle. Now I prefer to see this type of candle going below a low for me to engage in the buy. I prefer to see this type of candle going below a low because this is more convincing for the retail world, because once they see this kind of candle closing below a low, now they believe that this is a strong sell. I get it. They will believe that this is a strong sell. Now people seeing this candle rejecting, oh, the market is rejecting at this low, you get. So this to me is not a nice one. So I prefer to see this kind of candle going below a low. Then I'll prefer to buy the candle when they go below that candle. So that's the type of entry I love to pick when I'm bullish. Can you see? Hmm?
Yes.
So this is what I love to see. Now the market has hit a liquidity pool, which is this high. So target one has been met. So maybe your next target could be this high, if it gives you an opportunity to go there. Now you going low or high will depend on what the time frame above you is doing. Now once the market has reached a high, it is very important for you to leave.
Which market is still that?
You say? Are you talking to me?
No, I'm not talking to you.
Now once the market has reached a high, it is very important for you to take profit, at least 70% of your profit, because you never know what the market will do. Now if you look at this, we have a trending consolidation, which is also a kind of what liquidity being generated. There's a possibility that market will come below it, which is why once you've seen a close like this above a high, it's better you close 70 or 80% of your trade, because you never know if they're going to come back below it, which they actually did. Now once I've seen this, to me all this, I'll just pass it. I'll pass it, because what they are doing, they're engineering liquidity. That's why you see the market going up and down, up and down, up and down. What they are doing here is what they are engineering liquidity. All I will just do is to wait to see the next thing the market will do, where the market is breaking out from, if it's breaking bullish or bearish. But I have a solid belief that it's going to break bullish. At least to this high, because liquidity is being engineered here. Liquidity is being engineered here. Now you see it's still going higher. Now at this point again, there is need for you to go to a higher time frame to see, to have a clear picture of this range. There's a need for you to go to the higher time frame to have a clear picture of this range, to know what the market is actually doing. So I think this is 58 minutes since we started this class. We just end the class here. I don't like a class to be this long. I prefer 20 to 30 minutes for the comfort of the viewer, those that will come after you, maybe those that will be watching this class later in future. So that's all about it. In summary, what we just did is what we explained this: when the market has created a low and you see not something like this, if you are going to buy a retracement, don't buy a shallow retracement. Wait for liquidity to be engineered, then you buy. If you must buy a sharp retracement, what I mean by sharp retracement that did not engineer liquidity, much liquidity, then you wait for a deep retracement, preferably into another block, then you buy. Okay, that's the summary of this class. I think with that, I'll say good luck and good trading.
Thank you so much. Bye.
If you have any question, you can always ask me in the DM.